Could cryptocurrencies become the reserve currency of the future? And could gold still play a role? He's the best-selling author of Currency Wars and a longtime critic of the US dollar. Jim Rickards joins us back in studio. Jim, good to see you again.
Great to be with you, Daniela.
So I know a lot of people will want to get your thoughts on how you're seeing this Bitcoin craze, cryptocurrency craze. How do you see it right now?
Well, it's interesting. I looked at it last night. I think it was $3,000 for one Bitcoin. It might be $4,000 by tonight.
2,600 as we speak.
2,600. Well, it's down a little bit off the top. Look, Bitcoin is a form of money. I have no quarrel with that. It's definitely a form of money. And when people say, the price of Bitcoin is $2,000 or $3,000, it's not an investment. It has no yield. When you buy stock in a company, you can analyze the company. How's the management? How are the assets, et cetera. When you buy a bond, you can analyze the bond. What's the interest rate? Who's the issuer? Creditworthiness, inflation. You buy real estate. There are ways to analyze all these things. Bitcoin is just money. So when you buy a Bitcoin and give your dollars to get Bitcoin, or your euros, or your Chinese yuan, or whatever it is, all you're really doing, you're exchanging one form of money for another form of money. It has no yield. There are no Bitcoin investable assets. There are no Bitcoin bonds out there. So you're just swapping one kind of money for another. So when you see the price going to $2,000, $3,000, you can say Bitcoin's going up, but you can also say the dollar's going down. In other words, people are expressing a liquidity preference for Bitcoin as a form of money over dollars. That's one theory evaluation. What's the evidence for that? None, because if that were true, if you were losing confidence in dollar, then gold would be going up, oil would, and they're not. So it looks like a bubble.
But in a sense, it's not like money because we can't keep printing it, right? It's capped.
Well, it's capped to some level, but we're not there yet. So where do Bitcoins come from? You can buy them in a secondary market. If you had some, I could buy them from you, or you could buy them from me on an exchange. So there's a secondary market. But Bitcoin are created by, they call them miners, although it's a little bit of a misnomer. They're basically people with a lot of computing power and some development expertise solving really hard math problems. And when you solve the problem, you get a Bitcoin as your reward. Now with Bitcoins at, whatever it is today, $2,000, $3,000, $2,600 or whatever, it's a pretty big incentive. The costs of mining, so-called, are not zero, but they're pretty low relative to, the $2,600. So to me, it looks a little bit more like the Fed. How much does it cost the Fed to create a dollar? Well, the answer is zero. It doesn't cost them anything to create a dollar. What does it cost to create a Bitcoin? Well, you got some investment in computers, but nowhere near the market price. So it looks a little bit like the Fed, where you keep cranking them out. They're money. And when you buy a Bitcoin for dollars, you're just swapping one kind of money for another.
So if you don't see it as an investment,
it's not an investment.
Right, you don't see it as being a reserve currency then?
No, because to be a reserve currency, it's not enough just to be money. Like the dollar is a reserve currency. 60% of global reserves are in dollars. But the reason they're in dollars is not because of the dollar. It's because of the bond market. In other words, let's say I'm China and I export stuff and I get dollars. What do I do with them? I can't put them under my bed. You got to go invest in something. And so we have the treasury bond market. Now, same thing with euros. If I earn euros or I earn dollars, swap them for euros, I can go buy German government bonds. So those are reserve currencies because they have investable assets. If I earn Bitcoins, if I ship stuff and you pay me in Bitcoin, what do I do with the Bitcoins? There's nothing to invest in. And so it can't be a reserve currency until someone goes out and creates a Bitcoin bond market, but it's too small. I mean, the Bitcoin's like a sandbox, like the kids are playing the sandbox, the real money's over here, but they're having fun.
So do you think it's just a frenzy overhyped, it's going to pass soon?
Yeah, and what's the valuation metric? So one valuation metric, as I mentioned, is that they're losing confidence in the dollar. But there's no evidence for that in the other markets, gold, et cetera. So there are two other valuation metrics. One is the greater fool theory, which is, I don't care what they're worth. I'll pay $3,000 because some sucker will pay me $4,000. And then someone will say, I'll pay $4,000 because some sucker will pay me $5,000. That's the greater fool theory. It works for a while until it doesn't. The other valuation metrics is criminal. So if you're a tax evader, drug smuggler, and sadly, I would say political refugees, if you're in North Korea trying to get out, or even in China trying to get out, there's some value in Bitcoin because the authorities might not let you take your capital. So I have a little more sympathy for the political refugees. The criminals, their day will come.
Let's talk about the tax evasion, because you mentioned offline that the IRS might really start paying attention to Bitcoin.
Yeah, people don't understand this. I mean, it's pretty simple, actually. Let's say I bought a Bitcoin for $1,000 and I sell it for $2,000. I have to report a $1,000 gain on my tax return. You got to put it on, pay taxes on it, 40% or whatever it is. How many people are actually doing that? I don't know the answer, but I'm going to guess that it's not a large percentage. Most people are whipping and driving these Bitcoins, racking up large gains, not putting it on their tax return. The minute you do that, you're a tax evader. You're like Al Capone, who ended up in Alcatraz. Now, there hasn't been much enforcement, but I'm a tax lawyer, I was
Yes.
tax counsel at Citibank for many years. The IRS is kind of waiting on this one, and they'll come out of the woodwork sooner than later. Probably subpoena one of these exchanges. The exchanges will tell the IRS to, go jump off a building. IRS will get a court order, shut down the exchange, freeze all the bitcoins, and those people are going to find they're out of luck unless they come forward and identify themselves. This is what the IRS did to Americans with Swiss bank accounts. They'll do it to Bitcoin.
All right, buyers beware.
Yes.
And finally, Jim, what do you make of the comparison to Bitcoin and gold? A lot of people are talking about these two things. I know you see gold as a currency, you see Bitcoin as a currency.
Yeah. Look, here's what I say, Danielle. Dollars are money, gold is money, Bitcoin is money, euros are money. They're all different forms of money. So you have a liquidity preference. So when you say the dollar price of gold or the dollar price of Bitcoin or the dollar price of the euro price of Bitcoin, they're all just cross exchange rates. So take your pick. I like gold. I have some cash. I have some dollars. I have gold. Actually, I have some silver. I don't own any Bitcoins. But, for people who want to have a preference for Bitcoin, good luck.
Jim Rickards, thanks so much for stopping by.
Thank you, Danielle.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.
Hey!